Insurance is an essential aspect of personal finance that helps individuals protect themselves from unforeseen events that may result in significant financial losses. It is a crucial part of financial planning, and it can be used as an investment tool to help individuals achieve their financial goals. In this article, we will discuss the importance of taking insurance as an investment and how to use insurance as an investment. Welcome to the Jack Up TV. Why is taking insurance important as an investment? Protection against financial risks. Insurance provides protection against financial risks, including illness, injury, disability, and death. It is designed to protect individuals from the financial burden that these events can cause. With insurance, individuals can ensure that their families are protected in the event of their premature death or disability. Long-term savings. Certain types of insurance, such as life insurance and annuities, can be used as long-term savings vehicles. These types of insurance policies allow individuals to accumulate funds that can be used to meet their financial goals, such as paying for their children's education or saving for retirement. Tax benefits. Certain types of insurance, such as life insurance and health insurance, offer tax benefits. For example, the premiums paid for a life insurance policy are generally tax-deductible, and the death benefit paid out to the beneficiary is generally tax-free. Similarly, health insurance premiums are often tax-deductible, and some policies offer tax-free withdrawals for medical expenses. Peace of mind. Insurance provides individuals with peace of mind, knowing that they are protected against financial risks. It can be a source of comfort during times of uncertainty, such as a medical emergency or the loss of a loved one. How to use insurance as an investment. Life insurance. Life insurance is a type of insurance that pays out a death benefit to the policyholder's beneficiaries in the event of their premature death. It can be used as a long-term savings vehicle, as some policies allow individuals to accumulate funds that can be used to meet their financial goals. For example, a whole life insurance policy may provide a guaranteed cash value, which can be used to pay for expenses such as college tuition or retirement. However, it is important to note that the primary purpose of life insurance is to provide protection for one's dependents, and using it as an investment should not be the primary focus. Health insurance. Health insurance is designed to protect individuals against the high cost of medical care. It can be used as an investment in a few ways. For example, individuals can choose high-deductible health plans that allow them to save money in a health savings account, HSA. The funds in an HSA can be invested and grow tax-free, providing individuals with a long-term savings vehicle for healthcare expenses. Additionally, some health insurance policies offer long-term care benefits, which can help individuals save for potential future healthcare expenses. Annuities. An annuity is a financial product that provides a guaranteed stream of income for a specified period or for life. Annuities are often used as a retirement savings vehicle, as they provide a predictable stream of income in retirement. Annuities can be fixed or variable, with variable annuities offering investment options that allow individuals to grow their savings over time. However, annuities can be complex financial products, and it is important to consult with a financial advisor before investing in one. Disability insurance. Disability insurance provides protection against the financial burden that a disability can cause. It can be used as an investment by ensuring that individuals can continue to earn an income even if they become disabled. This can help individuals maintain their standard of living and save for future goals, such as retirement. Property and casualty insurance. Property and casualty insurance protects individuals against the financial loss that can occur due to property damage, theft, or liability. While property and casualty insurance is not typically used as an investment, it is important to ensure that individuals have adequate coverage to protect their assets. For example, homeowners insurance can protect against the financial loss that can occur due to damage to one's home, while liability insurance can protect against the financial burden of a lawsuit. Long-term care insurance. Long-term care insurance provides protection against the high cost of long-term care, such as nursing home care. It can be used as an investment by providing individuals with the means to pay for long-term care expenses without depleting their savings. However, long-term care insurance can be expensive, and it is important to carefully consider the costs and benefits before investing in a policy. It is important to note that while insurance can be used as an investment tool, the primary purpose of insurance is to provide protection against financial risks. Individuals should not rely on insurance as their primary investment strategy, and they should consult with a financial advisor to determine the best investment options for their specific financial goals. Tips for using insurance as an investment. Choose the right type of insurance. There are many different types of insurance, and it is important to choose the right type of insurance for one's specific financial goals. For example, individuals who are focused on retirement savings may benefit from an annuity, while those who are concerned about long-term care expenses may benefit from long-term care insurance. Evaluate the costs and benefits. Insurance can be expensive, and it is important to carefully evaluate the costs and benefits before investing in a policy. This includes considering the premiums, deductibles, coverage limits, and potential payouts. Consult with a financial advisor. Insurance can be a complex financial product, and it is important to consult with a financial advisor before investing in a policy. A financial advisor can help individuals evaluate their specific financial goals and determine the best insurance options to help them meet those goals. Consider the tax implications. Certain types of insurance offer tax benefits, and it is important to consider the tax implications before investing in a policy. For example, the premiums paid for a life insurance policy may be tax deductible, and the death benefit paid out to the beneficiary is generally tax-free. Review and update policies regularly. It is important to regularly review and update insurance policies to ensure that they are still providing adequate coverage. Life events, such as the birth of a child or a change in employment, may require changes to one's insurance policies. Conclusion. Insurance is an important aspect of personal finance that provides protection against financial risks. It can also be used as an investment tool to help individuals meet their financial goals, such as saving for retirement or paying for their children's education. While insurance can be a valuable investment, it is important to carefully consider the costs and benefits before investing in a policy. Individuals should also consult with a financial advisor to determine the best insurance options for their specific financial goals. Alright, that's a wrap. Thank you for tuning in.